Hello folks, this is Tony Drake from Drake & Associates with an educational economic update for October 2016. In this month's video, we'll discuss some of the events that influenced markets in September and help you understand what they can mean for you as an investor. Please stay tuned at the end for a required disclosure statement. The third quarter ended in volatility for U.S. financial markets. After a sleepy summer with historically low volatility, markets became more turbulent in September. Let's talk about some of the headlines that drove market movements last month. The Federal Reserve was again at the source of much speculation. The central bank met in September to vote on interest rate policy and decided not to raise interest rates again. The Fed is in a tough spot right now because it needs to bring rates higher to avoid overheating the economy. However, central banks also need to be careful not to raise rates too soon or too fast, or they risk hurting the economic recovery. The economic data right now looks moderately good, but the Fed knows that there are risks on the horizon. What comes next? It's not likely that the Fed will raise rates at the November meeting, when the presidential election is still a political factor. So that makes the December meeting very important. Wall Street thinks the odds of higher interest rates after December are over 60%. Interest rates have complex effects on the economy, corporate profits, markets, and consumer finances, which is why investors care about where rates are going. Overall, we can expect the Federal Reserve to be a source of market volatility through the end of the year. The third release of Quarter 2 economic growth data shows that the economy grew 1.4% in the second quarter. While the growth is below trend, economists expect to see stronger growth return in the third quarter. Two unofficial projections of gross domestic product show that the economy may have grown 2.2% in quarter 3. However, forecasts have come down steadily in recent weeks, and it's possible official growth numbers could disappoint. What can investors expect in the coming weeks? Well, volatility and more volatility. Markets are grappling with a lot of uncertainty, especially ahead of the November election. We also know that the Federal Reserve wants to raise interest rates this year. On top of that are concerns about oil prices and Britain's exit from the European Union. Overall, we can expect markets to remain uncertain until these important questions are resolved. As always, we'll keep you informed. We have some upcoming Social Security classes November 1st and 3rd at the Franklin Public Library, and also retirement classes at Mount Mary University. Visit wealthwisconsin.com to learn more, and be sure to listen to our Retirement Ready radio show, AM 620 WTMJ, Saturdays at 1 o'clock. Once again, this is Tony Drake with Drake & Associates, signing off for the month of October 2016. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal situation, please give us a call. We'd be happy to talk to you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are provided by Drake & Associates, LLC, a state of Wisconsin registered investment advisor. Insurance products are offered through a separate company, Law Financial Advisory Group, LLC, a Wisconsin insurance agency. Clients are under no obligation to purchase any recommended insurance products. Thanks again.